What's up, guys? As you can see, I'm floating $44,000 on this trade, and I wanted to give you guys an update because, yes, I'm up on this trade, but I did take 2 losses in NASDAQ, so I want to share those with you guys. That way you can learn from my mistakes, and also I'll break down this trade really quickly for you guys. So first, I want to go over NASDAQ and the trades that I took here. So let me turn this on, and we can take a look at the trades that I took. Looks like the overall idea I wanted to have happen is going to play out, but it is what it is. I am watching for a swing trade though. I want to see, actually, we got kind of what I want. I like this. I like this right here. With this inversion right here. What kind of stop is this? Because it would be a higher stop. I want to give it some room. So it's like 125. I'm just going to go ahead, not buy. Oops. Definitely don't want to do that. I want to go ahead and enter one contract. I might scale into this. But I'm likely going to swing this one. And I'll put my stops up here at that high. Now I want to put my take profit much lower down here at this level, and just let this thing run, and I'll break over why. So the reason for this, the reason I also took some losses this morning were that this morning I looked at it like we had taken out this high over here. Here we go. Now I've got this cluttering my charts, but it's okay. We had taken out this high, this time-based high, which was the London high, right? That was made between midnight and 6. So we took that out, and the market had started to move down during the session. And I was looking at this over here like a possible sell off this fair value gap, because I looked at it like, we'd taken out that high. The market was displacing down. We came into the fair value gap right there, and we had got a good reaction. So if we look at it like this, market had dug into that. I like the way this candle came down and engulfed the previous. So that was the first trade I took. Stops were just at this level. Kept them really tight, and I got stopped right there. Now, once I got stopped, I was still looking at this in the same way, and we inverted another fair value gap, and the market came down, and if I can click this fair value gap, it came down and inverted. So I took another sell right here, and I got stopped with my stop right there. Both of these were very light size, so I lost about $1,600. Looking back, I probably should have just mechanically traded this first candle rule bounce entry right over here. So if you look, we had that first candle rule push to the upside, and then this would have given a 3R win. But, to be honest, I'm looking at the market like I think it's going to go down. The main reason for that is just overall higher time frames to me are bearish. I also like the way this 4-hour candle is looking, to be honest with you. And I'm looking for lower prices on indices in general. Like, I'd like to see all of this down here at some point. As you guys know, I've been calling for that. So we'll see how the trade that I just called right here plays out. And the logic behind it, to be clear, is that we have a 4-hour fair value gap. So if you notice right here, and I'm going to turn these off so we don't have so much clutter. But if you notice right here, we've got a 4-hour fair value gap, right? This is the same model we traded for gold. We got to tap into the level, got a couple, but then what happened after that tap? This is the model right here. You tapped right here, you swept above it, meaning the market traded through it, and then you got your inverted fair value gap. So when I see that, ideally I would have liked to get a little bit of a better entry, like on the close of this candle, but the risk to reward's still good. And that's something else I see a lot of traders like overthink. They think if they don't get like the perfect entry, they just can't trade. But the way I look at it is like, do I have good risk to reward, right? That's really all I care about. And for me, typically I'll risk anywhere from 3,000 to 5,000 on a trade. So this, to me, I'm still not even in a full position. So I'm happy to, as long as I'm getting good risk to reward, still, enter the trade, because it meets my model. 4-hour fair value gap, then the 15-minute sweeping and engulfing. I'm sorry, not engulfing, and inverting a fair value gap. So we'll see how this one plays out. I'm just targeting these lows down here. But likely I will leave. I'm going to leave this here because I'm going to go to the gym in case we get a flush. But I will watch if the market does make it down there to see how we react once we hit that level, right? Like, let's say if the market is rushing down towards it and we displace through it, I'll likely leave my orders open and see if we can get some legs under it. So, yeah, guys, hopefully by the time you see this, you are able to maybe catch this trade even. All right, so back to this gold trade. As you can see, it's rushing pretty aggressively. And the reason I got this trade was really simple. It's very similar to what I just taught you on NASDAQ. It's just using a 4-hour fair value gap. So I watched right here. We had a 4-hour fair value gap, and then the market tapped down into it, but we waited for a sweep. So you go from the 4-hour fair value gap, go to your 15-minute. And if you notice right here, the market drilled down into that level. So we swept after we drilled down into it because the market hit it. You don't want to trade this right here. This is where a lot of people get chopped up. They think that you're going to get a market structure shift and you just immediately trade. No, don't do that. You need to wait for a sweep, because if there hasn't been a liquidity sweep and you can't see the liquidity, then you are the liquidity. Only the OG Casper audience will know that reference. I used to say that at the end of every video. It's kind of funny. But now after that happens, we want to see all the fair value gaps in that little move, the last move, get inverted. Okay. So as you can see right here, I entered a little early. Now I've been doing this for 9 years, so I don't think that a beginner trader should be as aggressive as I am, but you could have just still waited for this candle closure and that would have been the confirmed entry, and your stop loss would have been down here. So it would have looked something like this. Put your stop right there. And then for the target, which is the most important part, you want to make sure that you find an obvious area of liquidity. If you notice right here, we had all of these equal highs. So cool. That's, our obvious area of liquidity. Now that's really good risk to reward. And one might say it's greedy to hold past this. But personally, I think that the secret to becoming a profitable trader for many of you guys is hidden within your own trades that you already have. And when I say that, I mean that a lot of the times, go back and look at your winners. How many of them did you just take profit at the perfect time? My guess is very few of them, okay? So if that's the case, then if you were able to squeeze out that bit of extra risk to reward, what would your average risk to reward realized look like? You might just be a profitable trader already and you don't even realize it because you're not getting the most out of your winners. So the way we need to do this is not by just greedily holding on to trades. We need to do it in a way that also protects us from downside. So how do we do that? Once the market hits into our level, we're going to trail up our stops to candles that close through levels, okay? And then you can also trail them up along the way when we're making new structure after we've swept liquidity. So trail up the stops along the way, but after we've hit this level, move stops here. After we make a new high, move stops here. After we make a new high, move stops here. Why would I take profits on an extremely bullish trade? This is where a lot of people would say, oh, he's being greedy, he's gambling. But this is the fucking truth, guys. If you want to actually scale and make big money trading, you're going to have to hold on to some of your winners. Not everything is just going to be a fixed small risk to reward, right? I'm sitting here floating 11R up $44,000, $45,000. What am I going to do? I'm going to follow a mechanical system, and then I'm going to go to the gym. I'm going to go about my day because I know that this is the way that I'm actually going to be able to achieve big wins like this. And if you can't think like this, then sure, you might save yourself from some possible downside. You know what else you save yourself from? You save yourself from ever having the potential to win big. So I want you guys to implement this into your trading, and trust me, I test it for yourself. Go see how it works. Make sure you have conviction in it. But thank you guys for watching. Make sure to subscribe to the channel. If you want to join the free community, I'll leave the link down in the description. And if you guys like these trade recap style videos, now I guess live, we called a trade in this one too, just let me know in the comments and I'll keep making them. So appreciate you guys a ton, and I'll see you later.